Good day, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Wednesday, the 21st of April, 2021. Thanks for tuning in. Now listen, the Fed is in huge trouble if the gold and silver price go up too high. And the opposite of that is true. The Fed is in huge trouble if the markets start to collapse and the bubbles start to burst. So if they try to hold the markets together and try to keep the bubbles from bursting by injecting liquidity into the system, well, the gold and silver price are eventually going to break free. We might be on the very cusp of that happening right now. And if they go too high, they'll destroy the house of cards, because it'll mean a currency crisis. Okay, with that knowledge in mind, what do I expect to see in the future? Well, they're trying to walk this tightrope, and I've been talking about the tightrope for a while between deflation and inflation, the Fed. But as they progress, the wind's picking up for the tightrope walker. Basically, the Fed, tightrope walker. The wind's picking up, and they're going to be going into a hurricane on that tightrope. It's going to be getting more and more impossible for them to maintain that balance the further they walk out on that tightrope into the hurricane. So what do I expect? I expect very soon the prices on things, and they say, Fed chairman, he says, oh, this is all just temporary inflation. This is all just transitory inflation. Like it's going to disappear into the mist in a little while. No, sir. This is here to stay. It's more than transitory inflation. It's going to become ingrained. And then they're going to panic because they're going to see the price of gold and silver start to break free of their bounds. So what are they going to do? They're probably going to panic, and they're probably going to try a tightening process. I'm expecting about 3 months from now. What's going to be the result of that? Collapse. Very, very rapid. The Fed then is going to really be in panic mode, and they're going to have to go back. They're going to have to backtrack then. Right? It's going to cost them a lot of money. And when that happens, it's going to be visible for the whole world that they've absolutely lost control. They don't have control anymore. And it's going to be absolutely obvious to the whole world that they're going to print to infinity. So I'm afraid what we're in for is a little bit of a roller coaster ride here. Right? Because when they try to tighten, maybe about 3 months from now, and they trigger a deflationary shock into the system that's going to be very, very short-lived, because then they'll panic back in the opposite direction. When they create that deflationary shock that I'm kind of expecting, once that's over, it's going to be Nelly bar the gate for gold, silver, and cryptos. But the thing about it is during that period, it might be a very short period, it might be 2 weeks, it might be a month, crypto will be the worst affected by that. More so than gold and silver. Gold and silver, yeah, might get smashed some. It might not even get smashed. It might hold ground. But crypto, when the market sells off big, crypto, because it still hasn't made that transit between safe haven asset and speculative investment. It's still in that little bit of a netherworld region where an awful lot of people hold crypto as an investment, but it's also still a speculative asset. It hasn't really made that fully made that transition, and it's in a bubble. So when you get the stock market finally breaks, because the Fed breaks it, because they panic when they see gold and silver going up, and the Fed tries to cool things down a little bit, and doesn't, it backfires right in their face. Do you remember the temper tantrum? The taper tantrum, it was called, during Ben Bernanke, when he tried it on to taper back what the stock market did. Well, this could be 10 times worse. Okay, so it as far as cryptocurrency is concerned, once this game of silly beggars is over that they're playing, the Fed right now, and once they are fully committed to MMT, modern monetary theory, and once it's shown beyond a reasonable doubt that they'll never be able to turn back away from these programs of stimulation, sky's the limit for things like crypto, gold, and silver, because there's very few avenues out of a currency that's going through a crisis. And that's when the real panic will begin to try to get in. Now, your gold and silver are going to disappear. You won't be able to get physical. And the price, well, nobody's going to be selling when that time comes. So we got a lot to look forward to. We got a very, very turbulent period coming in financials, But there's more, guys. Listen, there's more. And this is very, very, oh my goodness. I'm going to tell you. The Dust Bowl's coming back. I can't believe it. What's the chances of this being a coincidence? The Dust Bowl was something that occurred back during the Great Depression in the United States, way back, in the 1930s, 1920s and 30s. And the Dust Bowl, what it is it's an enormous drought-ridden area in the United States, down through the Midwest and through the plain states and stuff, and everything. Extends up into Canada, into the prairie provinces. And it's a phenomenon, it's a weather phenomenon, that can cost the country endless amounts of food production. And it hasn't occurred since way back in the 1930s, when we were going through a turbulent period, much similar to today, and a Great Depression, much similar to today. What's the odds of a weather phenomenon that only occurs like once every 100 years, coinciding exactly with another turbulent period of a depression and everything else? What's the odds of that? Like the two things coming together at the same time, and then like one waiting for the other until to happen. Now I need to do a show on this Dust Bowl that's just getting really underway, and it could cost our food production massively. And so I'm going to tell you guys, this could, grains like wheat, it could be not only in short supply, but the price could double, triple, quadruple. You want to buy a bag of flour? Are you ready to pay $200? This is ridiculous. Anyway, but let me get started. Let's open up the charts right, let's see, right here. And let's take a look. This page keeps recycling. I don't know why. For the silver price, we'll move on to cryptocurrencies today. Cryptocurrencies are 2075 billion, starting to make a little bit of a recovery from being knocked down. $56,000 for Bitcoin. Now I'm going to tell you, if I can get this chart, silver is 2642. It's up 61 cents on the day so far. That's a big move. See, it's starting. If they can't control the price of gold and silver and it starts to unleash, the Fed will probably panic and react. They might try to raise interest rates on the short end of the yield curve, the overnight rate. They may actually try to raise it, which is called tightening, by the way. I'm going to tell you, if they try that, oh my gosh. And they might be forced to try it if gold and silver start to become unleashed right now. In price, if we start to see the silver price push up to $30 or even over, if we start to see the gold price cross the $2,000 boundary again, they might be forced to. When it's moving up really fast, they might try to knock it down, and it'd be the biggest mistake they ever made. Because the markets are perched up there, and any sign of tightening or anything like that, everything's gonna break. Once everything, look, we've got so much pressure on this financial system right now from over leverage. So much unbelievable over leverage. There's never been a bubble like this in history, guys. This has gone past precedents. We're in unprecedented territory. This has gone beyond normal. This is an abnormal, far beyond abnormal. Oh my gosh, guys. You have no idea the fireworks could begin, how quick the fireworks could start. We're living in a fireworks factory, and some kid's walking through the fireworks factory with a lit firecracker, ready to throw it into the heaps of fireworks. You know? Anyway, gold price today. Gold is up $13.50. Now, we already did crypto. Let's take a look at the Dow. The Dow's up today, 191 points, 34,013. Crude oil, $62.22. I'm telling you guys, you better start preparing for what's coming. Seriously. I don't know how we've got through the last couple years. I mean, the system was ready to collapse before coronavirus. Now, it's far more unstable than it was then. It's funny, back then, I thought a collapse was imminent because of the over-leverage. Now, with the Fed printing like $7 trillion more on top of that, they've destabilized the system now. This is a financial system that is totally destabilized. And it could come unglued overnight. I'm telling you, it's a really, really, really dangerous situation right now. You say, well, Glenn, how do you prepare for this? Well, you need a plan A. And a plan A is to secure your home and clean out a closet, fill it with water, food, a medical kit in your home, and think about home security. Maybe a security camera, maybe a peephole in your door. You want to secure your home. If you live out in the country, maybe a strong fence around your property, you know. And you need to have a plan B. You know, and a plan B might involve an old car. If you got an old car and you own it and everything's good on it, all paid up and everything, maybe it's been sitting in your car a few years. Fix it up and get it running, you know, as your plan B. And maybe it needs a few new tires. I don't know. Maybe if you live out in the country or something, you got to have some sort of a plan B in case plan A goes. And, you know, there's a Chinese curse. And they say, may you live in interesting times. And I'm going to tell you that this is very interesting times we're living in right now. It's a period of global upheaval. And I'm just hoping that no wars start, that it stays smooth that way. But even if it stays smooth that way, we are looking at nothing less than the collapse of the Western financial system, and something will have to be done, some sort of a reset. What I think's coming is central bank digital currencies. And I think their first iteration of these central bank digital currencies are going to end in failure, which is going to make the situation even worse. That's my opinion. I think they're going to end in failure because I don't think they're going to be backed by anything. And I think they're going to have to do the same thing as they're doing with the dollar right now. They're going to have to create so much of them. They might work for a while. I don't know. But until they start backing currency again, currency has to be meaningful. It has to be backed. See, and this is where the problem comes. Nixon in 1971, when he took us off of the gold standard, he opened up Pandora's box. Okay. Move index today. Oh, oil price, 62.22. Move index today, 64.35. Bonds and rates. We're looking at the long end rising. we're looking at 1.68 on the U.S. 10-year and 2.27 on the U.S. 30-year. And we're looking at yields rising 1.8% looks like on the 10-year. Anyway, okay, listen, thank you guys for listening to my show. Like and subscribe. And I should do a show on the Dust Bowl that's occurring now over on my Delta Report channel. We'll catch you guys in the very next episode. Bye-bye.